All right, Bulls and Bears, back with another dose. Folks, we've got a lot of news to get caught up on. I can't believe some of the news that I have to report here. Actually, I should believe all of this, but every day I wake up and I'm amazed. I'm amazed at the numbers that they're trying to sell us or tell us. I'm amazed at the news that they're trying to convince us about the economy, about a lot of other things as well. I'm going to talk about the jobs numbers. The stock market actually dropped on a stronger than expected jobs number. We're going to break that down for you. Sounds just backwards, doesn't it? Bass-ackwards. Also, we have major news to get into regarding the fires. I think most of you have been following that pretty closely. It's been national news, global news. Actually, you could see the California fires from outer space. I saw one of those Earth shots of California. You could see it from outer space. It's crazy. And a lot of other news to get caught up on. We'll dip into a lot of different things here. But first of all, the jobs numbers. Let's talk about what happened here. And stocks went down on this. Stocks got clobbered because of a blockbuster, what they're calling a blockbuster jobs report. It's actually not blockbuster, and we're going to explain that. The economy added 256,000 jobs in December, well above expectations. But as some of the headlines read, like this one here out of MarketWatch, stocks got clobbered Friday despite a blockbuster jobs report. So you would think, on first glance or first thought, strong jobs number, good, right? That would be good for the stock market. No, why did the stock market sell off? Because the stock market is more concerned about central bank stimulus than jobs, right? Let me play that back. The stock market is more concerned about central bank stimulus than jobs. So investors would rather see a bad jobs number, which would mean the Fed would have to come in with lower rates to rescue the economy. You see how this works? So it's not about jobs anymore, folks. Of course, they're still going to put the number out there so they can brag and tell people how many jobs they created, but they didn't actually create many jobs, and we're going to talk about that here in a minute. But how backwards is it when a good jobs number is bad for the stock market, right? Because the worse the numbers are, then the more likely they're going to have to cut rates, and that's what the investors are looking forward to. And it's ridiculous, but that's how it works, folks. But here's how bad it really is. These jobs, most of them were rehires, right? These aren't even jobs added. Sure, they're jobs added, but a lot of the people getting these jobs that were added were just laid off or left other jobs. And let me just show you here. Just remember the number, 256,000. Well, unemployment filings just for the last ending January 4th was just over 200,000. And that's just 1 week. So take that, multiply it by 4 just to get you close to about a month would be. You're talking about 800,000 unemployment filings in a month versus 256,000 jobs added in a month. That just shows you that most of these are rehires from people that got laid off. So really, when you look at all the numbers and just use logic here, this is a slow motion train wreck, folks. And the fire just continues to blow my mind what's happening in Los Angeles. I won't get much into it because it's been all over the news. 10,000 structures now, so 5,000 more than just from what I reported yesterday. 10 people unalived. A lot of criticism being passed around right now from quote-unquote leaders, from the governor to the mayor, not being prepared, empty fire hydrants. It's almost like somebody wanted this destruction to happen. I mean, that's how unprepared it looks to me. It looks so ridiculously unprepared that it almost seems like it was too stupid to be stupid. I mean, it can't really be this inept. So a lot of people are saying, well, there's more to the story. I'll leave that to you. Really sad part here, hundreds of animals treated for burns. Here in San Diego, the shelters had to take in a bunch of pets from Los Angeles because it was just overflowed up there. And some of the shelters up there had to get all their animals out of there. And of course, people with their pets, and pets ran away in some cases. People lost sight of their pets, and some of them, of course, not going to make it back. But the ones that were found, and a lot of them from the shelters, are being shipped to other cities, including all the way down here to San Diego. Pretty sad, folks. No matter where you live at, I mean, a lot of people out here have something, I should say a lot of people in the U.S. have something against Californians. They think we're all politically bent in one direction or something like that. Folks, we're all just people, and we're all just trying to get by. The reason I live in California is because of family, and I think a lot of people are still here because of that. I love the weather. I used to live in Michigan. The winters were terrible. Love the weather out here, but the fires, the cost of everything, the homelessness, everything else, just makes me want to think twice about staying here. But we have an RV. We're ready to go if the fires come too close to us. Hopefully we'll be able to get out. Did you guys see the gridlock on the freeways? It's like even though you think you can escape, you'll have an escape plan. You say, okay, I got an RV. We're all going to load up. We're going to have our survival gear, bug out bags, what have you. And all of a sudden you're stuck on the freeway for 3 hours moving nowhere. Basically it turned into a parking lot. They're estimating 150 billion in damage. Major reservoir was offline and empty when the fire started. A lot of weird stuff. We had insurance companies canceling thousands of policies shortly before the fire, leading people to come up with, theories of, people being tipped off to this. It's too crazy to even think about. But there was one more thing, though, regarding the jobs numbers. Another thing that proves that the jobs are actually not being added, it's just a lot of them is rehires, is because the labor force participation rate
Let's do all of that with StoneX Chief
has still not recovered from pre-health crisis. You see, looking at the chart here, we're still about 6 million jobs below where we were pre-health crisis. And this is the number of people not in the labor force, right? So it spiked up at the onset of the health crisis, came back down. But basically, we've been treading water here and just about losing as many jobs as we've been adding, and still 6 million more people out of the labor force now versus right before the health crisis. So another chart that just backs up the numbers and the real data, the real facts. And the stock market, all the indices were down today being January 10th, Friday. It's being said that it's because of the jobs numbers being good, but I think there's more to it. I think there's a lot of fear beginning to enter the markets finally because of the new administration with all the different changes coming up. The tariffs is just the tip of the iceberg, folks. There's so many different things that are going to change here just in the next couple weeks that it's going to, I think, rock a lot of people's worlds and maybe even blow some minds. 100 plus executive orders. Too much to even get into, folks. It's going to be crazy. And I think we're going to see some fireworks fly off here in the very near future. New York is taking aim at Wall Street investors buying homes. I'm not sure if I believe the news. I believe that they're talking about it, but I don't think anything's going to be done. Over in New York, they're taking aim at Wall Street's home buying activities. You know as well as I, that's one of the big things keeping home prices propped up. In some places, investors are buying 1 and 2 homes. Here in California, only about 50% of the people own their home. That means somebody's paying rent to somebody else. Half the people are paying rent to somebody else that owns a home. And a lot of times it's a big Wall Street investor or hedge fund. We told you about Indiana in our last report. There's parts of Indiana where 1 and 2 homes are owned by investors. And over in New York, I think they're just putting this out there. I don't think it's going to happen. They seek to limit hedge funds from buying up homes, folks. I don't think that's going to happen. There's a reason these people, talking about the politicians, there's a reason these people make a lot of money, and it's not their salaries, and it's not that they become savvy investors as soon as they take their positions. It's things like this. I think they'll probably, and I'm talking about the hedge funds, will probably give a nice payoff for there not to be any change in the laws. In other words, investors, hedge funds, multi-billion-dollar Wall Street firms will still be able to come in and buy as many homes as they want to without any restrictions. Now, something pretty interesting that I want to mention here is Jim Rickards. He's been around for a while. Most of you know he's written books. I think I've got a few books by him as well. He is predicting some sort of black swan, and he admits that this is an inflationary and it's a melt up type of situation with all the money creation going on. He also is basically of the belief that we're going to need some sort of big disruption, aka black swan, in order for this melt up or inflationary economic collapse to reverse and turn into some sort of collapse or deflation. Quote, we are now positioned for a historic crash, is what he says. The specific cause does not matter. It could be war, natural disaster, bank or hedge fund collapse, or another unexpected situation. What matters is the super fragility of the market when the trigger is pulled. That's true. Things are so over leveraged. A minor hiccup, a minor glitch could really cause big problems. And we know that the hackings and the systems being compromised, the data breaches, all those things have really escalated, not by a little, but like double and triple what we used to see just 5 or 10 years ago. Hostile countries towards the U.S. He continues here. This is why Warren Buffett is sitting on over $300 billion in cash. And it's why central banks are buying gold. We've talked about those two things many times. Buffett, record levels of cash. We look back at previous downturns and corrections and unexpected Black Monday type of things. And Buffett's always sitting on a lot of cash at those times. Prepare now, he says, don't be the last one to know. Also, central banks buying gold. Why are they not stacking pallets of paper? If paper was the solution, why are central banks not just stacking pallets of paper in their warehouses, wherever they stack whatever they have? They're buying gold, folks. They're buying gold because they know that this ball game, even though it's long, it seems like we're in extra innings right now. They know the ball game doesn't have much more to go before something big drops here. And let's transition a little bit here, folks. I almost can't believe I'm saying this. Stimulus checks are back. New York proposed inflation relief checks are coming. Now, that's what the article says. Will it really happen? New York taxpayers to get inflation relief checks. And basically, it's a stimulus check just under another name. The first proposal to come, $3 billion worth of checks will be sent out. So it's going to happen to individual taxpayers making less than $150,000. And that's going to be $300. And then $500 checks for joint filers making less than $300,000. So you're on a $300,000 salary on joint incomes. What good's $500 going to do you, folks? It's not going to really help much in New York, but I'm sure they'll be happy to get it so they can go out and maybe a few trips to McDonald's. But more stimulus checks, folks, in New York. So they're charging people for driving into the certain area of the city on one hand, but on the other hand, because of the high cost of everything, they send out stimulus checks. Folks, this is bonkers. It's bonkers. Charging people over here just to give them money over here. I mean, this system is upside down, twisted, backwards, inside out. You tell me what you think about this. This is nuts, folks. Giving people money and then just raising the price on everything else. A fee just to enter the city. The sad part of this is kind of the mentality that's happening across the U.S. as far as how people think that they're going to be able to fix this mess on affordability. Folks, let's go to this next. I thought this was pretty interesting. This is the average monthly budget in the U.S. We've got housing over here eating up a whopping portion of the total here. It looks to be about over 20%. The next biggest looks to be, wow, taxes or transportation look to be the next biggest. Maybe a tie right there between taxes. Entertainment looks like to be maybe 5%. Healthcare looking like about maybe 10%. Dining out. Savings, they're saying that the savings is maybe about 15% of these household budgets. Doesn't seem like that when you look at the savings rate. Miscellaneous spending, groceries. I think groceries are a bigger chunk than they're representing there. But interesting. Thought that was a pretty good snapshot. Total spending, though, per household average, $8,484. Now, that's drastically lower and drastically higher in some parts of the country, but that is the average across the U.S. All right, folks, what do you think about that budget? What do you think about the fire destruction? All the strange situation coming out of there. Also, the unemployment number versus the jobs added. Again, we have to point that out because that's in the news. Stocks dropping even with the stronger than expected jobs number. Bonkers. Stimulus checks in New York, and they're charging people to drive in a certain part of the city. It's crazy, folks. It's only going to get crazier because nobody's talking about fixing this. They're just trying to put Band-Aids on the little sores here and there. But it's going to get worse, folks. Buckle up. Be ready. Keep stacking. As always, bye for now. Thanks for watching, everybody. Talk to you soon. Peace out.